this video, I'll be going over how I was able to bottom tick the New York AM session move. On Friday, I made a video explaining how you could use a top-down analysis to help you project levels and why you should trust them. And today, I executed based on that same idea I talked about. I'm going to go ahead and remove all drawings. This is the 3 a.m. This is when London actually opens. 3 a.m. and then we have a sell-off. So last video on Friday when I posted it, it was a 2 a.m. sell-off. And what I have to say about that is from 2 a.m. to 3 a.m. is the exact same relationship from 8:30 a.m. to 9:30 a.m. It's 1 hour before the actual market opens. So London opens at 3, New York AM opens at 9:30. I recommend, if you're going to trade a session, to hop on the charts 1 hour before. And we're going to do a top-down analysis on how you could have caught the trade. We're just going to start on the daily. I was going to mark out 9:30, but it's going to look bad. So we have the daily chart right here. You have wick number 1, which is what we formed today, and then you have this wick. So with this daily wick, you're going to draw it out with a Gann box, probably. From the low to the high, this is the rejection block. Boom. This is the discount of the rejection block, 0.5. Anything above it, that's a premium since we're selling. So anything below is discount. If you're bullish, you're looking to buy. You want to buy in the discount, and if you're looking to sell, you want to sell in the premium. Now we're in the 4-hour chart. You have this high, the rejection block. This is what I marked out from here to here. So 6 a.m., 10 a.m. This candle didn't form until after New York opened. So we also don't necessarily have too much. We have this rejection block. I'm just going to use a Gann box. I'm not trying to give away too much sauce. But you see that? So we have this rejection block, which was used. So we have this fair value gap. We have this order block. I might as well mark it out. This order block, this 4-hour fair value gap. So 4-hour, 4-hour. They're going to drop down into a 1 hour. So this is the 10 a.m. candle, so everything to the right, don't even worry about it. It should look like, worry about this. This is the 9 a.m. open. So whenever it hit 9, we opened right here. We also have this 1-hour rejection block. So now we're going to mark out this one. And since this is a more refined rejection block, so this might be a little hard to see. We have the 4-hour right here. You drop down into a 1 hour, it becomes a little bit more refined. So I use this rejection block, and now I'm looking at the 0.5 level of this rejection block. So we're going to drop down into the 30-minute now. How does it look on the 30-minute? We have this 30-minute order block, which was used. Why is it doing that? 30-minute order block, which is used to create this. We have a good reaction off that. We have an inverse gap right here. Actually, we didn't inverse this until after 10 a.m. So never mind. We have this bearish gap with this bearish order block right here. Up move before a down move. We have a bearish gap. So we're going to use this this bearish momentum to come down back into my level, if that makes sense. Sorry if it doesn't. I'll try and explain it more in the mentorship. This should be episode 3 of the mentorship. I'm just going to upload the daily recap as a mentorship video. The upcoming videos are going to be more of explaining what's going on. The upcoming videos are going to be explaining what I'm talking about, especially if you're a newer trader. Like what all the confluences are. For example, what is the rejection block? What is their liquidity sweep? This is supposed to be a startup mentorship. I'm not trying to turn you into the best trader in the world. I'm just trying to help you all out. Because I know how I felt when I was first starting out. I was seeing all these other people hit good trades. I was seeing all these people make 5 figures monthly, 5 figures daily. I was seeing that, and it put me in a very bad spot for a while because I was like, why not me? So that's the reason why I'm doing this mentorship, to help you guys out, because a lot of people like to gatekeep that stuff. And the fact that I was able to figure this out for myself, I don't want to gatekeep it because I was able to figure it out. Enough yapping, let's get back into it. We are on a 15-minute. We have a 15-minute order block right here. I'm going to delete this. This is the 4-hour rejection block. We deleted it. So now we're focusing on the 1 hour. So we have an order block at the top. We don't really have any price movement in here. We have no inverse gaps. We have no order blocks besides below here. So we're going to look over here. Not really much either. We have this 15-minute bullish gap, but it's kind of up really high. I'm not really focused in this price range. I'm more focused on the discount level of the 1 hour rejection block. So I'm just kind of looking down here. But I don't really see anything on the 15-minute. So let's go down to the next lowest time frame, the 5-minute. What am I seeing here? I see a order block near the discount level. You have these rejection blocks on the 5-minute. Cool. That's pretty good. We can stop right there. Let's go down to the 3-minute. So what's popping on the 3-minute? We have a bigger rejection. We have a bigger order block. Sorry. And then we have nothing else. We have an order block. But this is at the 0.5 level of the 1 hour. So, you know, we have this rejection block, which is the wick of the order block. You kind of have to know. Every wick is a rejection block. You just have to know which one is going to work. That is the true truth. I think we use reverse LTE here. Anyways, so we dig deep into that. Let's hop onto the 2 minute. What are we seeing on the 2 minute? We have the 1 hour. We have order block. We have inverse gap. Like, the more lower we go, the better it looks. Liquidity sweep, gap, order block, right? And then, you know, you end up building all of this level. And then whenever you build up that level, give me a second, turn on executions. Once you build that level and you're confident in it, let's hop down to the 1 minute. Depending on how confident you are in your level. So 0, this is the premium of the 1 hour. This is the discount of the 1 hour rejection block. This is the deep discount of the 1 hour rejection block. I'm more looking for the consequent encroachment. So on the 1 minute time frame, we don't dig into it on this candle. I had more reasons to get in at this level. It like wicked, came back up, and then the next candle it came and dug deep, relatively. And then after that, we went up. We used this rejection block. And we come up. We form an order block. Come up again. We were kind of having troubles getting out of this area. But then we eventually pushed up. This is a bearish gap. We close this gap. This is also the 9:31 a.m. candle. So you have the 9:30 a.m., which is the New York Open. And then any fair value gap formed after the 9:30 a.m. So from 9:31 on, that's first presented fair value gap. This was the first presented because it formed at 9:31. We come up, we make an order block inside. This is also the consequent encroachment of this. I ended up drawing out a line here because order block, inverse first presented fair value gap, and then you have the consequent encroachment. And then for completeness sake, from the bodies, boom, boom. The bodies did not come outside of this order block. We just wicked outside. We used this rejection block. Came back up. We made a gap right here. We had inverse gap, bullish gap. This is technically the order block. So we come down, we use that. Hop on the fib. If you wanted to catch this retracement, boom. The discount, we closed around discount. We dug deep into OTE, or we didn't dig deep at all. We dug into OTE. And this is where I got out. Why did I get out? Because we have this 1 minute order block, 1 minute gap, inverse gap. We have a we have a BPR here. Something price range. Bulletproof price range. I have no fucking idea. It probably doesn't even have to be bulletproof. I don't even think that's what it means. BPR is when you have a gap and then you inverse that gap, and it's just pretty much a bullish and a bearish gap in the same spot. So this is the bullish gap, and then the gap to go bearish, that inverse, is also like pretty much in the same spot. That's BPR. I was looking at this level and I was like, you know what? I don't need that much. My goal was around 1250, and that was to put me over 53,000, and I got that. Unfortunately, it says I have to make $93 for consistency. Whatever. I don't give a shit about that. So I don't get to have the picture in my email saying that I'm a certified funded trader yet. But I am above. You know, we have a 3,000 maximum loss limit. My PDLL is currently 200. It should be 250. Boom. PDLL is 250. So much I'm looking to risk. We have this level right here. Let's go back to the daily, or this is the 4-hour chart. Look at that. You possibly could have top ticked for the lunch and PM session reversal. Let's check it out on the 1 minute. So another reason why you could have gone bearish here is because you have the new week opening gap. So we ended trading at 4:59 p.m. on Friday last week, and then we opened up at 6 p.m. on Sunday, and there is a gap. So this is the closing price that we left on Friday, and this is where we opened up at. There's a volume imbalance here. And then we came up. At the start, we made this wick. So we opened here, came up, made this new high. And then we went down, we used this gap. Extend this gap to the right. This is going to be a good draw on liquidity. This is text NWOG, new week opening gap, NWOG. Boom. We use it over here. We make these equal highs. Or we make this high, and then we make a lower high, making this equal highs. We come up once more to take that out. We have a selling program. And then this is the London Open. We have a sell-off. So we could re-come back up. This is good liquidity. We don't quite reach it before market open. And we leave equal highs. So this is 815. We don't reach this liquidity. This is the NWOG. And not only that, if you go bottom right to the ETH, click RTH, regular trading hours. So this is where we stopped trading yesterday. Actually, technically, on Friday. This is where we stopped trading. Right? What is regular trading hours? It's pretty much when New York is trading. So you go from the close all the way down to the open. So the close happens at 4:14 p.m. This is when they stop trading. And we reopen at 9:30. This is when New York starts trading again. You have a gap. So we want to fill that gap normally. So that's another draw on liquidity. I got out right on the consequent encroachment. We ended up filling the gap, touching the NWOG, leaving equal highs. And then we came, used the gap, went back up, took out these equal highs. But yeah, let me go back to extended trading hours, which is the regular. So you have equal highs here, and then you have this high, you have these equal highs. So you could have held it to go higher. And then we look up here. We have this bearish gap. Let's say you're too scared to enter here. You have a bullish gap right here. We ended up getting inversed. And then we consolidate. Accumulation, manipulation into this inverse and bearish gap. Also sweeping out these equal highs. Accumulation, manipulation, distribution. Right? Today was a very good day. A lot of people like to hate on No News Mondays. A lot of people are talking about if you took a trade today, you're dumb. The consolidation was so bad. Yeah, for sure, buddy. This is my model. This is what I've studied. I'm simply a student to price action. That's it. I don't know if this made full sense. Please leave any comments if it didn't. I'm just making this recap because, I was asked to on TikTok. But yeah, have a good day, everybody. Leave a like, leave a subscribe, and leave a comment down below. All right, later.